A profitable UAE mainland business can still have inaccurate books, missed tax obligations, and unsupported transactions. Growth does not automatically mean compliance. Here are 9 accounting compliance facts every UAE mainland company should understand in 2026. This OBG Outsourcing guide explains the practical controls mainland companies need for accurate accounting and dependable tax compliance. Fact 1. Outsourcing your accounting does not transfer the company's legal or tax responsibility. A service provider may maintain the books, prepare reconciliations, and assist with tax returns, but the company remains responsible for providing complete information and approving accurate submissions. Outsource the work, not the oversight. A reliable UAE outsourced accounting service should give management visibility, not remove management from the process. Management remains accountable. Fact 2. Bookkeeping should be maintained throughout the year, not reconstructed only before a tax deadline. Monthly bookkeeping helps you spot missing transactions, duplicate expenses, unpaid invoices, cash flow problems, and incorrect VAT treatment while the information is still available, and the bank balance alone does not show profit, liabilities, unpaid taxes, or the true financial position. Cash is not the same as profit. Flows the books monthly. Fact 3. A UAE resident mainland business must monitor the VAT registration threshold, using a rolling 12-month test and expected activity during the next 30 days. Mandatory VAT registration generally applies when taxable supplies and imports exceed 375,000 dirhams during the previous 12 months or are expected to exceed that amount during the next 30 days. A business may be eligible for voluntary registration when taxable supplies, imports, or qualifying taxable expenses exceed 187,500 dirhams. Review the rolling threshold every month, and remember, total accounting revenue may not equal taxable turnover. Fact 4. VAT registration is only the beginning. Once registered, the business must prepare its VAT return and make the related payment within 28 days after the end of the applicable tax period. A VAT return should be supported by properly classified sales, valid purchase documentation, credit notes, imports, reverse charge transactions, and reconciled accounting records. Do not estimate the VAT return from the bank statement. VAT compliance begins with transaction-level accuracy. Fact 5. UAE corporate tax is not simply 9% of revenue. For a typical mainland taxable business, the calculation generally begins with accounting profit or loss and then applies the relevant tax adjustments, exemptions, deductions, and reliefs. 0% applies on taxable income up to 375,000 dirhams and 9% on taxable income above it. That band refers to taxable income, not turnover, and not cash received. In a simplified illustration, revenue of 2 million less expenses of 1.5 million gives an accounting profit of 500,000. After 20,000 of adjustments, taxable income is 520,000. The amount above the band is 145,000, and 9% of that is 13,050 dirhams. If the accounting profit is wrong, the corporate tax calculation begins with the wrong number. Fact 6. Small business relief does not mean the company can ignore corporate tax compliance. An eligible UAE resident person may elect for small business relief when revenue does not exceed 3 million dirhams in the relevant tax period and all previous relevant tax periods, subject to the applicable conditions. The relief is not available to every person, and eligibility must be supported by records. An eligible taxpayer must still register where required and submit the applicable simplified corporate tax return within the deadline. Relief is a tax treatment, not permission to stop bookkeeping. Confirm eligibility before making the election. Fact 7. Corporate tax returns and related payments are generally due within 9 months after the end of the relevant tax period, unless a specific decision provides a different deadline. For a financial year ending the 31st of December, the general filing and payment deadline is the 30th of September the following year. Do not wait until the 9th month to organize your records. The return may require information involving related parties, tax adjustments, losses, reliefs, and financial statements. Prepare early. Review before filing. Fact 8. Payroll is not only an amount transferred to employees. Private sector establishments must follow applicable wage payment and wage protection system requirements. Payroll records should also agree with employment contracts, approved salary changes, leave records, deductions, benefits, the WPS submission, and the accounting ledger. Every stage should tell the same story. If the payroll register shows one amount and the ledger shows another, that difference must be reconciled. Payroll services should include reconciliation, not only preparation of the payment file. Fact 9. Financial reporting must be based on complete and supportable accounting records. Corporate tax records generally need to be retained for at least 7 years after the end of the relevant tax period. VAT, commercial, payroll, and industry-specific records may have separate retention requirements, so follow the longest applicable period for each record type. A report is reliable only when the balances can be traced back to supporting evidence. Whether financial statements require an audit depends on the company's legal form, license conditions, regulatory requirements, and other rules. Even when an audit is not required, accurate financial statements remain essential for management, VAT, corporate tax, banks, and investors. Let's recap the 9 facts. 1. Outsourcing does not transfer responsibility. 2. Bookkeeping should be completed monthly. 3. VAT thresholds must be monitored. 4. VAT returns require accurate supporting records. 5. Corporate tax is based on taxable income. 6. Small business relief is not automatic. 7. Corporate tax returns and payments have deadlines. 8. Payroll must reconcile with WPS and accounting records. And 9. Financial reports and source records must be supportable. Filing is the final step. Compliance begins with the daily accounting records. OBG Outsourcing helps UAE Mainland companies maintain organized, accurate, and tax-ready accounting records. Our UAE outsourced accounting services can include monthly bookkeeping, bank and credit card reconciliation, accounts payable and receivable, payroll accounting, VAT support, corporate tax compliance support, and financial reporting. Services can be adapted to your transaction volume, industry, accounting software, and reporting requirements. Management retains visibility, while the accounting workflow becomes more consistent and controlled. Accurate books, clear reports, confident compliance. If your UAE Mainland company needs dependable bookkeeping, payroll reconciliation, VAT support, corporate tax preparation, or financial reporting, contact OBG Outsourcing for an accounting review. Subscribe for more practical UAE accounting and tax compliance guidance. This video provides general educational information only. Tax, payroll, audit, and accounting requirements depend on the company's legal form, activities, license, tax status, and specific circumstances. Obtain professional advice based on current UAE legislation before acting.